It does seem as if the Fed story has been in the driving seat, despite the strength of the AI narrative and what we've seen from NVIDIA. This is something that, I don't know, will it start to weigh more on stocks? Are we close to pricing out Fed cuts this year?
We are getting closer and closer to pricing out those Fed cuts, and I think we still have more to go. Look, in the short term, it has clearly weighed on the stock market already. I think that was definitely part of the dynamic yesterday. However, a scenario where yields are going higher because the economy is just too strong is not a negative environment for stocks. So overall, when we see yields go higher for positive economic reasons, ultimately, stocks will continue to go higher through that. They might just go higher in a more volatile fashion, but it is generally a good backdrop for stocks. It is not as good as a scenario where economic growth is strong and yields are falling, and that's what the Fed set us on in December, but it's still a positive scenario.
OK, and do we have to consider then, given the way you set it out there, Mark, do we need to consider which bit of the yield story is on the rise and the shape of the overall yield curve? I was reading some Venn Ram research, analysis on the Markets Live blog this morning, flagging that the 2-year, the yield there is not all that far from 5%. And could we test that today? Could we test that next week with the PCE data? What are you watching in terms of the shape of the yield curve?
Yeah, look, the yield curve, in the length of this inversion, already a record inversion for as long as we got records going back, has confused me for a while now. Maybe I'm the one who's been naive here because it's only when the yield curve re-steepens after inversion that you should start to worry about recession. So maybe this scenario of where we have a curve still inverted, then it's overall good for stocks. And that has generally been the history. During inversion, it's good for stocks. Now, the slight catch is it doesn't normally stay inverted for this long because inversion itself has an economic impact and should change how lending happens, which ultimately should provide a bit of a break in the economy. We're seeing no real sign of that yet. So all that is to say, at some point, I expect a pretty severe steepening, but there's no sign of it just yet, and I don't want to make the mistake of calling for it to happen imminently again.